There is an epidemic of trading educators on TikTok right now, all claiming to teach institutional trading. They speak in impressive terminology, build carefully curated personas, and present private, self-claimed track records as if they are unquestionable fact. It can look advanced, it can look exclusive, it can even look credible. But behind the smoke and mirrors, behind the institutional order flow jargon, many of them are repackaging the same retail concepts that had been feeding new traders into the slaughterhouse for years. This series is built to help aspiring traders identify red flags in trading educators before they subscribe, spend money, or buy into their ideology. This is not just about one person, it's about the patterns. I can't make a video on every educator in this space, but I can show you the red flags they repeat. Learn the patterns, spot the red flags, and protect yourself before they ever get your money. Today's video focuses on TradePhantoms. First, I'm going to break down how they build credibility and manufacture authority. Then, the technical lessons they sell as advanced. And finally, the difference between talking like an institutional trader and actually trading with clarity and transparency. The first thing you see on their website is this headline: "Most retail traders lose. Let us help you fix that." This isn't about verified edge. It's a psychological hook aimed at frustrated beginners desperate to be rescued. It targets a pain point because pain is easier to convert than skepticism. Then, right under that, authority claims 55 plus years of trading experience, live trading with experts, real strategies, no fluff. I'll get to that no fluff in the last section. It sounds impressive, but notice what's missing? No names, no faces, no firm history, no audited performance, no public track record. The whole pitch depends on you confusing presentation with proof. Then comes the line, "We keep our identities hidden for a reason." That's the foundation of the brand. Trust our experience, but don't ask who we are. In the proven results section, the biggest red flag is this: all TradePhantoms pro-trade are tracked and shared directly with our members. That means the evidence, if it exists, is placed behind a paywall. So now the structure becomes public claim, private proof. That is backwards. Real credibility works the other way around. You show enough public proof to justify the claim, then people decide whether they want to invest. When a business uses the word proven but keeps the proof private, what they're really asking for is blind trust. Then they say, "We have over 3 straight years of consistent returns." Let me get this straight. 55 plus years of real trading experience, but when it comes to actual performance, the claim suddenly shrinks to just 3 years? And consistent returns without context, size, drawdown, risk, market conditions, or independent verification means almost nothing. Then they redirect to a Trustpilot 4.9 out of 5-star rating. This is classic diversion tactic. Instead of proving trading ability, they pivot to social validation. Reviews praising community and support are fine, but they often reflect hope, early progress, and psychological commitment, not necessarily what has been objectively proven. The question is not whether these reviews are real, the question is whether they prove the thing being sold. And if the only third-party validation is that beginners felt supported, what does that really tell you about their trading ability? Alright, we've seen how they sell authority. Now let's get to the meat and potatoes. what they actually teach, because this is where institutional order flow magic supposedly happens, and where a lot of it falls apart. Take a look at one of their public YouTube lessons, Understanding Order Flow and Price Action. Adorable green balls on the left, red bears in baker aprons holding cupcakes on the right, one big red candle in the middle. Now, don't get me wrong, simple analogies can help beginners, but when your entire brand is built on 55 plus years of real trading experience, institutional order flow, and how professionals actually trade, this level of presentation feels less like serious education and more like a children's storybook. The core idea isn't wrong. Buying and selling pressure is trading 101. It's been taught in retail books and free YouTube video for over a decade. But here's the pattern. Wrap that basic concept in fancy terms like institutional order flow, imbalances, and professional market approach, and suddenly it sounds exclusive.
Buyers were in control, driving price action up. They met an area of hesitation where for a brief period of time, buyers were buying, sellers were selling, price was not really moving very much. But eventually in this area here, there were so many more buyers than sellers that all the sellers were exhausted and all we had left was a huge imbalance of buy orders. More buyers than sellers, this big pile of unfilled buy orders. And because there was that imbalance, buyers took control, impulsively driving price action upwards again. So what we can say about this area that we've marked off here is that there's an imbalance in order flow of more buyers than sellers causing that reaction in the market. And that's why we're looking at that as an area of potential institutional order flow, an area where a bank has bought historically, driving price action upwards.
Let me translate that for you in the simplest terms. Price went up, green candles, then it paused a little bit, then it went up again, more green candle, therefore institutions. They call this an institutional demand formation continuation pattern. In plain English, a basic bullish continuation setup. Lastly, let's address that no fluff claim they make on their site. This is one of their live streams from April 7, 2026. Look at the chart. All the lines, annotations, zones, and levels. For a brand promising institutional order flow and no fluff, this does not look clean, it looks bloated. When a framework is this broad, it becomes much harder to tell whether the analysis was actually right or just flexible enough to explain anything after the fact. This isn't reducing noise, it's multiplying it. To a beginner, it can look advanced, it can look detailed, it can even look like deep institutional insight. But in reality, institution has become just another marketing label on top of a clustered retail chart. Nothing I've seen from them publicly suggests a special understanding of market mechanics or an ability to forecast price with real clarity ahead of time. What I see is basic retail ideas, inflated language, and a presentation style that make ordinary concepts look more sophisticated than they really are. This is the real difference between sounding like an expert and proving you are one. It requires clear expectations, consistent execution you are willing to show publicly, the ability to explain your reasoning without hiding behind complexity, and results that hold up across different market conditions. At some point, you have to stop asking whether it sounds advanced and start asking whether any of it can actually be proven. Because once you strip away the branding, the mystery, and the inflated language, what is left looks a lot less like institutional trading and a lot more like basic retail concepts sold at a premium. Learn the pattern, spot the red flags, protect your capital.